Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Robb, how was your week? How was your MLK Day?
Week was great, Gary. MLK Day was awesome. Obviously, we had the inauguration today, so tons of things happening here in the United States. Looks like you're in the same place you were last week. So, were you watching all the events unfold from the same place as you were last week?
I am in Ho Chi Minh City, Vietnam, used to be known as Saigon. So the inauguration took place at midnight here. I was up watching with Tracy Schuchart, energy expert and a frequent guest on the Five Things and the show here. So, we were watching the handover and, taking bets on both the crypto markets and which of the 250 executive orders were going to be put into place first.
Okay, more importantly, did you buy any Trump coin?
I you know I did not. At Deep Knowledge Investing, we just own Bitcoin. Kidding aside, it was kind of a funny week for that. This was not my favorite move by President Trump. I thought the optics of it looked bad. It looked like he was making a money grab. More importantly, just leaving aside the politics of it and the optics of it, I would just caution people that these meme coins, while fun and while they can go up really quickly, are not real investments. There are no assets behind them. And somebody might say, well, wait, what's behind Bitcoin? But there is a difference. With Bitcoin, there was no pre-mining. Bitcoin is hard to mine and has a declining issuance schedule. It really is stored energy, and it takes a lot of effort to mine a Bitcoin. Even Satoshi himself or themselves, depending on which origination story you believe, did not pre-mine any Bitcoin. He actually had to turn his computer on and mine it himself. So I do think one of the things that the Bitcoin community has done that's very smart is they've created a difference between crypto and Bitcoin. And I think that marketing is smart and accurate. Um, for the meme coins, if you're doing it, I would just recommend viewing it, like a lottery ticket or like walking into a casino, something fun where, you could make a lot of money, you could lose all your money. If you're doing it for entertainment, great, go enjoy yourself. But I would not view those as real investments. And I say that regardless of, whether you think President Trump is, the end of democracy or whether you are pro MAGA, team MAGA, let's go, wherever you are on the political spectrum, invest wisely.
Gary, getting into this week's five things, we're calling this the Treasury yield and Bitcoin issue. We're going to start off with exactly that, Gary. Thing number one, will 5% Treasury yields disrupt Bitcoin?
So, Rob, last week we talked about Treasury yields. And one of the things that surprised people was when the Federal Reserve started to lower interest rates. They lowered the Fed funds rate in September. And over the course of the next 3 months, they lowered the Fed funds rate a total of 100 basis points, which is 1%. They said the reason they were doing it was to lower borrowing costs for people. And then people were shocked that the yields on the 10-year and longer securities actually went up. Borrowing costs went up. Now, at Deep Knowledge Investing, we were not surprised. We told the Fed, do not lower rates. It's not going to go well. And the bond market, which is made up of pretty smart people, started to price in higher inflation. And we saw yields start to rise. Now, the 10-year yield last week peaked at a little bit over 4.8% and ended the week at 4.6%. And, for whatever reason, the bond market likes round numbers. 3% is kind of a big number, and 5% is a big number for the bond market. And so the concern was if the yield on the 10-year rose to 5%, it would crash the equity markets, which may happen. And then that would in turn cause a drop in the Bitcoin market. And so there was a lot of debate on Twitter or X about that in the last week.
Gary, with the expectation that if you have the 10-year crossing the 5%, you're looking at negative for the equity markets. with that, we see Bitcoin kind of trade with the NASDAQ as a beta proxy. But we also, Bitcoiners will tell us, hey, we also need to look at why the market drop might come into play here. Because we basically have a situation where higher bond yields caused by inflation fears that could be tailwind for Bitcoin, actually a bullish signal. So, what are your thoughts? Seems like there's some mixed thoughts on the analysis that you just laid out.
Yeah, Rob, I think that's exactly it. So you've pointed out both sides, and the question is, wait, which is true? And the answer is, I believe both are true. It depends on the timing. So the person who's done really good analysis on Bitcoin correlations is Lynn Alden. She's somebody that we really respect at Deep Knowledge Investing. And Lynn recently did a study that showed that Bitcoin trading is most closely correlated with global liquidity. But after that, it's also very correlated with the NASDAQ. And when we say it trades as a high beta proxy for the NASDAQ, it's just a fancy way of saying if the NASDAQ falls, Bitcoin falls more. If the NASDAQ goes up, Bitcoin goes up more. So here's what I think is the chain of events. If the 10-year crosses 5%, that is likely to make the market go down. If the market goes down, Bitcoin is likely to fall more in the short term. But the reason this would be happening is because the market would be pricing in higher future inflation. And another way to think about inflation is a reduction in the purchasing power of your dollars. If that's the case, well, guess what? The dollar price of Bitcoin tends to go up. Bitcoin will tend to go up in a high inflation environment. And so, in that situation, we think the long-term impact on Bitcoin is actually positive. There's a great discussion on Twitter or X between James Lavish and Peruvian Bull last week, where I think they did a great job pointing that out. So for any of you who find this kind of macro analysis confusing and saying, wait a minute, you're saying it'll go down and then it'll go up, and I don't, the 10-year, this and that. If any of you find this confusing, we can sum it up really easily. Hold on. There you go.
Very,
Just
very,
hold your
very simple.
Bitcoin. Don't check the price every hour like I do. I'm a little embarrassed. I check the price every hour. You don't have to. Just hold it. Be a long-term guy in this or long-term person in this, and you're going to be fine. That's the direction that we would recommend.
There we go. Very simply put. Gary, thing number two, we're talking quantum computing. Might be the first time in my life I will be having a conversation about quantum computing, but that's all right. Thing number two, Gary, who will feel the wrath of quantum computing, banks or Bitcoin?
All right. So, for people who aren't so familiar with this, the computers that we all use, the regular standard computers, work on basically programs that like ones and zeros that will perform the same way every time. Quantum computers work across probability fields. And I know that sounds very confusing, but we're just going to sum it up and say these computers are capable of calculation speed that is beyond anything humanity has seen before. Um, this they are sort of a reality now. They're not commercially available at the moment, but I think within our lifetime we are going to see quantum computing. And these computers have so much power, just way beyond anything we've seen before, that the concern is they will be capable of cracking any cryptography. And so, we've been getting a lot of discussions about this. Just, last month, people were saying we're going to have quantum computers. They're going to crack the Bitcoin codes, the Bitcoin cryptography. Within the last week, tech giants like Jensen Huang of NVIDIA, Mark Zuckerberg of Meta have said, yep, these computers will be terrific, but they're more than a decade away. Microsoft has said be quantum ready by 2025. So there's a lot of debate about when we're going to get these computers. But I think the thing to know is that at some point, all of our cryptography, all the things that we do and use to secure our accounts will be at risk.
Gary, so I think you mentioned it there. Is this a higher risk for Bitcoin assets, or does it kind of have the same inherent risk across different asset classes?
So this is one of those situations, Rob, where the public discussion I find kind of confusing and a little bit funny. Because Bitcoin is 100% a digital asset, people tend to focus on it. And there are a lot of people saying, wait a minute, once we get quantum computing, they'll crack the codes used for the blockchain. If you have a 24-word passcode to protect your Bitcoin cold wallet, they'll be able to crack that. And so people are acting like once we have quantum computing, Bitcoin is going to be blown up instantly. Okay, maybe, but there are two things that I would point out. One is, don't forget that when quantum computers are fully operational, they won't just be used to break encryption, they'll be used to secure encryption, right? It's not like once these computers are developed that they send them out like to the Bond villains all over the world who say we're going to steal everybody's assets, right? The people who who design the cryptography, they'll have access to them too, and so the same quantum computers will be used to secure. But here's the more important thing, and this is what I find kind of funny. A lot of people say, oh no, quantum computing is coming, and we think Bitcoin is at risk. So now what I'm going to ask everybody to do is pretend that you're one of those evil Bond villains. You're going to take over the world, you're going to steal all, right? Do what we want or we'll steal all the world's money. So would you, as this Bond villain, take aim at the $2 trillion Bitcoin market, or would you start with the $10 trillion of assets under management at BlackRock, the $14 trillion of assets being administered at Fidelity, the $7 trillion at the US Federal Reserve, the US Treasury market valued at tens of billions of dollars, and then proceed to the Bank of England, the EU Central Bank, and the Bank of Japan? Now, for clarity, I am not recommending that anybody steal from anyone or that anybody try to do any of this, but the point is that if quantum cryptography code breaking is used to be able to break into everybody's systems, there's no universe in where that's just a risk for Bitcoin. You'll have the cash, in your wallet, and if you own gold, you'll own your physical gold. But I think what people forget is that your money in your bank account and your brokerage account, it doesn't physically exist. It's ones and zeros in a computer system protected by traditional encryption and traditional cryptography. So basically, what I'm telling you is that in the event of this, it's not just Bitcoin at risk, it's everything at risk.
Great stuff there, Gary. And you're watching the version of the 5 things titled The Treasury Yield and Bitcoin Issue. If you haven't already, head to deepknowledgeinvesting.com. You can sign up for a free subscription. That'll get you access to information via email that comes out on our website. With that being said, you will be gated from premium content that's reserved for premium subscribers for $100 per month subscription, or a discount on a yearly subscription as well. Moving to thing number 3, we're talking CPI, Gary, Consumer Price Index. Thing number 3, the CPI is high and a huge relief.
So, Rob, with the December Consumer Price Index, which is when people talk about inflation, they typically mean the Consumer Price Index. Now, at Deep Knowledge Investing, we will tell you that the CPI is incredibly inaccurate and done so intentionally. It's intended to be inaccurate and it understates inflation. But when people talk about inflation, that's what they're talking about. So here's what we saw and here's what the market saw. The CPI has risen every month since the Federal Reserve started cutting rates. And the regular CPI, the all items CPI, showed an increase of 2.9% for the last year, which is almost 50% above the 2% target. I will also argue that 2% target is 2% too high. The Federal Reserve's mandate is for stable prices. That's 0% inflation. It was also a 0.4% for the month, which doesn't sound like a lot, but annualizes to just under 5%. That's 2.5 times the target. Now, the market ended up going up huge for the next 2 days after that. So why? Because here I am telling you, wait a minute, the CPI was up, inflation was up, this is a problem. Well, the core CPI, which excludes food and energy, and those prices were up, that was up 3.2%. And the thing that got Wall Street excited was that was down 0.1% from the prior month and 0.1% below the 3.3% expected. Now, I would just point out a few things. One, there is no way the Bureau of Labor Statistics is capable of measuring the price index to 0.1%. This is a rounding error. The other thing is, people like to look at the core CPI because food and energy in particular, tend to be very volatile categories. But I would just point out that if you're an average American, food and energy are actual expenses that you have. And when those prices go up, it's a problem at your kitchen table where, you may sit and do your budgeting for the month. So, a whole bunch of economists in Washington saying, hey, if we exclude all of these things, we don't have much inflation. And the thing that makes me absolutely nutty, because I think it's dishonest, is people are now starting to talk about this super core where they exclude food, energy, and shelter, which is a fancy word for housing, right? So, for all of you kind, viewers who are watching this, put it in the comments and let me know if in the last month any of you bought food, energy, paid the mortgage on a house, or had to pay rent, because those
Yeah.
are real expenses. And, Caleb Franzen, who's a guy I follow on Twitter and whose work I think is very funny. Basically, one time he put a joke where if you exclude everything, inflation is zero, right? If nobody has to buy anything, you have no inflation. So I think Wall Street got a little excited about a meaningless change in a metric that doesn't apply to most people.
Yeah, and Gary, it seems like real solution here is what we've been talking about for months and going on years now, is just the spending out of DC, and talk to our viewers about how critical it is to position your portfolio for what's sure to be more and more coming inflation.
Yeah, Rob, I think that's the key point. We spoke earlier in the show, and we've been talking about this for a couple of years. The Federal Reserve has lost control of inflation. They've lost control of the economy. This was something that we pointed out about 14, 15 months ago in the fourth quarter of 2023. Deep Knowledge Investing put out an ebook called Counterintuitive Inflation, basically saying the Federal Reserve was trapped. And that's where we are now. And that's what we've seen, right? Over the last 4 or 5 months, the Federal Reserve has cut interest rates. And instead of borrowing costs going down, borrowing costs have risen. The 10-year has risen. Mortgage rates have gone up, which is the opposite of what they wanted to happen. So the Federal Reserve doesn't have control. Inflation is being created out because of overspending out of Washington. Now, for the partisans in the crowd, I hate to inform you, this is a bipartisan problem. The Democrats spend way too much, the Republicans spend too much. I know people got very excited about this in the last election. We have a new president as of today. My hope is that President Trump will do something about this, but in his first term, President Trump was also a big spender. I have high hopes that Elon Musk at Doge, the Department of Government Efficiency, will do something to cut spending, but that really requires an act of Congress. And so, even Doge, even if Elon Musk makes these great suggestions and President Trump says, yes, I'm on board, those spending cuts have to go through Congress, and Congress has shown an unwillingness to cut their own spending. So basically what I'm saying is whether the CPI is up or down, we are getting more spending out of Washington. Congress is unlikely to cut it. The result of that is going to be more future inflation. And so, do I think this is a bad thing? Yes, it's a bad thing, but the real solution isn't going to happen. So make sure your portfolio is prepared for more coming inflation. And, if it's not, if you want help for that, reach out. This is what we do all day, every day. And let me also remind you that at Deep Knowledge Investing, we don't believe in good markets or bad markets. We think that even if there's bad policy, bad money, bad markets, there are ways to make money, and that's what we focus on.
Yeah, great stuff, Gary, there. And if you do have any questions, feel free to reach out. IR Investor Relations, what it stands for, at deepknowledgeinvesting.com. You can send in an email. Gary will probably look at it, maybe answer it via email. Sometimes shows up on the version of the five things. So you just never, ever, ever know. Gary, moving on to thing four, we're talking banks, bank earnings actually. And thing number four, Gary, we've got bank earnings are up big.
Yeah, so Rob, the major banks are big commercial banks in the US. They all tend to report in the same week. That was last week, and boy, did they all have great quarters. JP Morgan with record annual profits, a 50% increase in earnings, with almost a 50% increase in investment banking fees. Goldman Sachs, 118% increase in earnings per share. Morgan Stanley, investment banking revenue trading division, up almost 50%. Wells Fargo, Citi, everyone had an unbelievable quarter. Those stocks, which had sort of been languishing a bit, all took off. The laggards, if you want to call it that, the worst among them were up, from about 10% during the week. Others were up more than that. The biggest gainer over the last month was Citi, but the other big banks were not far behind. It was a great quarter for the big money center banks.
Gary, last week we talked about issues of buy now, pay later. We talked bad earnings, credit, mortgage issues all across the board. Seemed like we were painting a very, very gloomy picture, but now we get these bank earnings, and all of a sudden everything is good. Can you explain that issue? If everything sucks, why did we get such good bank reporting and earnings here?
Rob, that's a great question, and that's the right question to be asking, right? Because last week we talked about higher credit card delinquencies, higher auto delinquencies, problems in the collateralized mortgage-backed securities market, record delinquencies, record vacancies on commercial credit, and now just a week later we're talking about record bank earnings. What in the world's going on? And that so that's a great question. It's the right question to ask. And the answer here is what we've been talking about for 2 years. We've been talking about a bifurcated economy, which is just a fancy way of saying that we have an economy that is phenomenal for a small number of people as inflation blows up asset prices, and wealthy people and large corporations have been able to borrow in dollars, which are debased, meaning they pay their loans back in dollars that are worth less while they buy hard assets as the central banks blow up asset levels. Whereas, normal people are not doing so well. And inflation for them, instead of being an opportunity to buy assets financed with debt that becomes worth less, it just becomes a problem when they try to put food on their table, pay their rent, pay their mortgage with higher mortgage rates, or put gas in the car. And so we've had this bifurcated economy, and that's what we're seeing. Last week, we talked about weaker consumer lending statistics. When we talk about the big banks, they're lending to hedge funds that are doing well. They're lending to large corporations that are doing well. Basically, if you're lending to the ultra wealthy or big companies, or doing mergers and acquisitions business, trading business with the markets at or near all-time highs, those are great businesses to be in. But the average consumer is struggling right now. And so I think that's what we're seeing. I think what we're looking at is a continuation of this theme that we've had for 2 years, which is a small part of the country, a small part of the economy has done well over the last 4 years, and a large part of the country is struggling. I'm hoping to see that change. We'll see what kind of policy changes we see out of the new Trump administration. There are going to be a lot of regulations, and we'll see what happens with consumer credit. The one thing where we do have some hope is the first Trump administration was really good on deregulation, and I think the last 4 years have been very rough on small businesses, and I'm hoping that the second Trump administration, that they'll have a deregulatory um, focus that will help small businesses and help people who are running small businesses operate their business more efficiently and with less interference from the government. If that's the case, then we'll start to see some help for some of the people who have been struggling recently. I'm not telling you I know what's going to happen in this situation. This is my hope for the part of America that isn't necessarily doing business with Citi and Morgan Stanley and Goldman Sachs and JP.
Yeah, good stuff there, Gary. And we'll be sure to keep in tune with what's happening in the market. And obviously, yeah, with Trump taking office, lots of stuff happening already on day one of the administration, and I'm sure lots more to come. Gary, closing today with our fifth thing. We're going to a reader question. This one's come up a few times in the five things, Gary, but it's always great, especially with Trump coming into office, and we know we've got a pro crypto agenda. We're talking Bitcoin self-custody options. Thing number 5. Gary, I'm going to read it out. DKI reader JB writes in asking us if a digital wallet is the only way to hold his Bitcoin. Gary, I'll let you take it the rest of the way.
All right. So first of all, I want to thank two people. One, I want to thank JB for writing in. JB, this is a great question. So glad to be talking about this. And I did send you a personal email letting you know we'd be addressing this in the 5 things. Rob, I also want to thank you. All of a sudden, one day I started getting all these questions in my email. And I called Rob. I said, what in the world's going on? He said, oh, we added an Ask Gary feature to the website. I'm like, okay, well, that was a good idea. So because
marketing
Rob,
is a fancy word for testing. That's what people
yeah,
tell me, and I agree with them.
exactly. But it turned out to be a great thing, Rob, because what it did was invited our readers and our viewers to participate and let us know what's on their mind. And I will tell you guys that if all the questions we've gotten, I have either responded in writing or made them a part of the 5 things. So, if you want to be part of the show, if you want to have your contribution like JB, just, go to deepknowledgeinvesting.com, click the Ask Gary question. And, if it's a good question, politely phrased, we will be happy to address it. So going to JB's question, he wants to know if a digital wallet is the only way to hold his Bitcoin. Again, great question. So the answer is no, it is not the only way. And I want to start by reminding readers, please do not leave your Bitcoin on the exchanges. Now, somebody might say, wait a minute, what do you have against Coinbase? Nothing. Coinbase is a fine business. The problem is that if you hold your Bitcoin on an exchange, you don't actually own it. What you are is an unsecured creditor to a leveraged business that is not secure. It also causes you to miss out on a crucial benefit of Bitcoin ownership, which is having assets outside the primary financial system. So, you can own the ETFs, the exchange traded funds. There are 11 of them, I believe, that you can buy through your brokerage account. But again, remember, if you do that, you don't have control over those assets, and those assets only trade during market hours. That leaves you with a potential liquidity problem if there's overnight or weekend news. So there are better options.
Gary, do you have any in particular? I know you've written a long Twitter thread that's been recycled and shared countless times. Anything you would recommend, different types, or where people can just find more information? I know they can access that thread on your X, and I believe we have a full write-up on the website as well.
Yeah, absolutely. Let's talk about 3 better options. And also, let's be clear, with Bitcoin, there are lots of options, just like there is with your cash in the US dollar, right? You can hold it in your pocket, in your mattress, in a bank, in a savings account, in treasury bills, in a brokerage account. You have lots of options with cash. It's the same thing with Bitcoin. So let's talk about 3 options that would be better than leaving your money on an exchange. First, a hardware wallet or cold storage. That's a safer option, leaving your coins on an exchange. And you won't be as fast with it, but the truth is, if you're a long-term holder, right, or a holder, I have no idea if I'm pronouncing that right, but I've heard it pronounced 2 different ways. But if you're holding it for the long term, it doesn't matter if you're slightly less liquid. It's safer, and that would be a better option than leaving your coins on an exchange. To figure out how to do it, you're going to have to invest an hour or two in reading and research, but I think that's a worthwhile investment to understand the system. Now, a second option, and this is one that we've written on, is using a ledger device or other hardware device. And I have posted detailed, easy to follow instructions on how to move Bitcoin from Coinbase to Ledger. Again, I have nothing against Coinbase. I just want your assets to be secure. We will put a link to that thread in the comments here. That thread, I think, originally got something like 500,000 views, which was terrific. And we go through in great detail and make it really simple. I know it can be nerve-wracking for people to move Bitcoin. Everybody worries, what if I do it wrong? What if I send my Bitcoin to the wrong place? We talk people through how to do it, and what you do is you test it with just a couple dollars worth. So if you do something wrong, you won't be out a lot of money. And then when you feel confident, you can move more of it. Finally, for those of you who don't want to have to, keep track of a ledger device and be responsible for storing it, or for people who want institutional quality, multi-signature storage, where if something were to happen to you, hopefully it won't, but if something were to happen to you, your heirs could access their Bitcoin. I really like the team at OnRamp Bitcoin. We put a link to them in the written version of the 5 things. The team at OnRamp Bitcoin, and I've done a number of webinars and podcasts with them. They have a high quality solution that can make it easier for, again, if something happens to you, for your heirs to access your Bitcoin. And so they, if you're running, like, say, a family office and you want an institutional quality solution, I would reach out to OnRamp Bitcoin, talk to them, see if you're comfortable with their solution. But, I think the team there is really terrific. And I know those guys, and think they're, it's worthwhile to talk to them. Now, Rob, there are lots of options here. And whatever path you choose, just remember the Bitcoin mantra: not your keys, not your coins. If you don't have control of it, if you don't hold the keys, someone else does, and those coins do not belong to you, and then you are a creditor. So I am just encouraging everybody, put some of your assets, not everything, but some of your assets in Bitcoin, and learn to store safely. Again, reach out to Deep Knowledge Investing. We're happy to help if we can.
Yeah, and again, you can reach us at ir@deepknowledgeinvesting.com. That does it for this week's version of the 5 things. We'll be here again next week with another version of the 5 things. So stay tuned for that, as well as be sure to sign up for a free subscription, or please just like, comment, share the channel, subscribe if you'd like to as well. Sharing is one of the best things you can do to allow us to keep getting out this great content and information coming from Gary and his team. Gary, thanks as always for putting this together. I will leave you with the closing remarks.
So, Rob, first, I want to thank you for doing this with me. I know we are 15 hours apart. Well, I'm in Vietnam and you're in California. Thank you so much. I always enjoy this time for us to have together to talk about these important issues. And, I know it's hard with me so far away, and you're always just so much fun to talk to about these things. Also, want to have a special round of applause for 2 people in particular. A new Flying V team member, Nazim, has just started working with us on the videos. The work he did last week was phenomenal. Not good, not great. It was perfect. Nazim, thank you so much. Really appreciate what you've done. I also want to have a round of applause for DKI's new intern, Josh Reeves from the University of Tennessee. Josh has only been with us for 2-3 weeks, but boy, he is off to a terrific start. Already a real contributor, a meaningful contributor, and we're expecting great things out of him. I promise all of you we're going to get Josh on camera in the next couple of weeks. You'll get a chance to meet him personally and hear from him directly. And for a young man, he is certainly impressive. Finally, for all of you viewers, thank you so much for taking this time with us. Everybody always asks for you to like and subscribe. And if you do that, that's great. But either way, we know your time is valuable, and thank you for spending it with us. We will look forward to seeing you guys next week with a new version of the five things. Thanks so much. Have a great week, everyone.
Thanks, everyone.